stable equivalent, such as a treasury. This stability is, ironically, what makes stablecoins so potentially disruptive. Because they behave like traditional money, but can be moved on a more flexible digital infrastructure that is faster, cheaper, and always accessible. Stablecoins offer an upgrade to how we send, store, and use dollars. That is exactly why some banks and policymakers are uneasy. Stablecoins do not just fit into the existing financial system, they challenge parts of it. But for anyone who uses money, which is to say, all of us, stablecoins could be a very good thing. Stablecoins represent more than convenience. They shift leverage away from financial intermediaries and back toward the individual. Today, most of us park cash in traditional accounts that earn near zero interest, while banks reinvest those deposits into treasuries or credit products and capture the yield. In a high-rate environment, that is a meaningful spread and a missed opportunity. With stablecoins, individuals can hold digitized dollars directly without intermediation. And through emerging platforms, they can access blockchain-based money markets that offer yield in real time, no account minimums, no lockups, no waiting. Stablecoins also move at the speed of the internet. That speed and the programmability of stablecoins unlock entirely new financial behaviors. For example, a paycheck can earn yield before it is spent. A debit card can draw from tokenized treasury bills. A cross-border transfer can settle instantly for pennies. In this world, money does not just sit, it flows intelligently between earning, saving, and spending. And this is not just a theory, similar projects are already in the works. Uber, PayPal, Stripe, and Visa are actively integrating stablecoins. Companies including Amazon, Apple, and Walmart are reportedly exploring the same, drawn by the promise of faster payments and lower costs. These are not crypto experiments. They are the infrastructure of a new financial system being built before our eyes. If stablecoins work so well, why has not your bank told you about them? Perhaps because stablecoins represent a threat to traditional banking. When you hold stablecoins, the underlying value does not sit in a bank. It stays with the issuer or, in some cases, with you. That means banks would lose deposits and the interest they usually earn on your money. Stablecoins let you skip the middleman, and the old system does not love that. Stablecoins will also cut into credit card fees. Every time you use a credit card, 1 to 3% of the transaction goes to banks and networks. Retailers such as Amazon and Walmart pay billions in these fees annually. Stablecoins offer them a cheaper alternative, so naturally they are exploring their own digital dollars. For consumers, this shift is a win. Competition breeds innovation and banks are already seeking ways to evolve. What about fraud and other risks? No transformation of this scale happens without some new rules. Fortunately, regulators can see the risks and benefits of safe stablecoins. That is where the aforementioned Genius Act comes in. The legislation sets standards for how stablecoins are issued and backed, addressing the risks some people worry about, putting guardrails on the technology to protect the economy and to help ensure consumers can use stablecoins with confidence. Stablecoins are not a mysterious new currency. They are still essentially your familiar dollars, only turbocharged. They are evolution, not revolution. They take what we already use and enhance it with modern technology. In fact, they may be more than just a better dollar, they are the bridge. Once you cross it, everything else becomes easier. Faster payments, programmable finance, seamless global transfers. Digital dollars are here, and the journey will be a net positive for everyday people. By keeping the dollar's value and adding the speed and transparency of the blockchain, stablecoins hand people back some of the power in finance. The proverbial horses from the horse-drawn carriage will not be banished overnight, but they are no longer the only ride in town. Consumers, start your engines. Zach Lindquist is co-founder of Pure Crypto.